Good morning everyone. Wild week behind us, big week ahead. Here's the biggest number from last week. It's not the Nasdaq dropping 4.6, it's the S&P ending at 7,354. It's this, $93 billion left technology funds in a single week. Record outflow. Bank of America called it a risk of summer preview. The Nasdaq lost 4.6%, the Dow gained 0.06%. 8 of 11 sectors were up of the week. Industrials, healthcare, energy all caught a bit. The S&P still finished down, that's the Max 7 effect. But the money is clearly moving. Here's what moved and where it is going. Let me run through the two names I'm watching this week. First, JP Morgan, JPM closed Friday at 329.05 daily chart. All three trend lines are bullish. Long at 306, medium 311, short at 324. Price above all of them. That's a clean bull trend. The 1 hour chart shows a tighter picture. Price at 328, short-term trend at 331, medium 333. Slight pullback from the highs. Nothing alarming. This is a stock that's been quietly grinding higher while tech gets hammered. The catalyst? Steeper yield curve. 2 to 10 spread widened to 27 basic points. Banks borrow short, land long. That's tailwind. Here is my framework. Entry 324 to 326, the daily short-term trend and current pullback zone, stop 315. Below the medium trend line, target 1, 340, target 2, 350. The risk reward works. If you're new here, subscribe, watch this link in the pinned comment. Second name, Danaher, DHR. Ticker doesn't get much attention, but the chart is telling a story. Closed Friday at 196.19, daily chart. Price is above all three trend lines. Long at 192, medium 181, short at 183. And there's the part I like. It's also above the upper rail at 193. That's a breakout. On the 1 hour chart, price at 195, holding above the short-term trend, and 185. It's a clean structure. Danaher is a healthcare infrastructure play. They make the tools and equipment that pharmaceutical companies use to discover and manufacture drugs. Citrini Research, an independent shop, just updated the healthcare basket, specifically calling out the picks and shovels playing as an AI drug discovery. Danaher's Citiga business saw bioprocessing orders up 30% year over year. Biotech financing is recovering, M&A is picking up, and an AI and drug development is accelerating. DHR sits right at the center of all the three. Setup. Entry at 193 to 195, the breakout zone, stop at 185, below the daily short-term trend. Target 1, 210, target 2, 225. The breakout is fresh. If it holds, there's room to run. Let me flag the risk now. For JPM, if the yield curve flattens again, or if rate cut expectations return, bank loses the catalyst. NFP Friday is the swing factor. For DHR, the breakout is only a few days old. A forced breakout is possible. Keep your stop tight. And now, please drop a comment. Are you rotating after the tech or buying the dip in semis? I will pin the best take as always. Final watch list for the week, SPX at 7,350, lower rail, risk appetite, barometer. NFP Friday, the big one, and the Russell MSCI rebalances. Passive flows hit JPM and DHR through the index channel too. Bottom line, tech outflows are real. The money is not leaving the market, it's rotating. JPM and DHR are two names catching that flow with a clean chart setup. Respect the levels, respect the stops. Subscribe if this was useful, and always please trade safe. See you on the next video.